Welcome to SmithWeekly Discussions, an occasional program for our readers and listeners of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We now have part two with Ron Thiessen, President, CEO, and Director of Northern Dynasty Minerals, a copper and gold focused developer that is in process of advancing the Tier 1 Pebble Project in southwest Alaska. Northern Dynasty is listed on the New York Stock Exchange under the symbol NAK and on the Toronto Stock Exchange under the symbol NDM. Ron, it's a pleasure to have you on.
Andrew, thanks for the opportunity.
So, Ron, what scale? Give us a scale of disasters that the new design of the mine is being built, will be built to withstand. So even if there is some type of a disaster, what are the backup features of the design, and what would it take to truly disrupt the local ecosystem, or is it even possible outside of intentional acts?
Well, so let's start off. We don't accept that it is. I mean, we think that we can design this to prevent all of those things, even if they occur. And that so there's a couple of things. What's at the forefront of most people's mind is these tailings storage facility failures, and at the core of all of them is typically an engineering flaw, and it's usually, well, it's not usually, it is a situation where the storage facility is not being operated in accordance with the engineering design. As I said before, these facilities are designed to store sand. They aren't water dams. They have water on top of them far away from the front of the tailing storage facility, because you put the water up there to allow the tailing sand to settle out, and then you recycle that water. So you store a bit of water up there, but that's only the water that you're using in the process. Now, if you get excessive water, like Mount Poly is in a rain shadow area, they don't have sufficient evaporation. So if they get a couple of seasons of high snowpack and melt onto the site, they actually are net accumulators of water, and they have to do something with that, and they need to discharge that water. And so otherwise, the tailing storage facility is going to get saturated. It's going to overflow, and you're going to have a failure, just like they did. So to mitigate that, we've said, okay, we're gonna put water treatment plants in, so that when we say if it ever comes, and we're designing a storage facility and embankments that A, won't allow that to happen, and B, the 1 in 100 year, 1 in 200 year events in terms of snowfall, rainfall, that we will be able to deal with the water. And in the event we have to discharge water, we have two water treatment plants, very large scale water treatment plants that we are putting in. Your typical mine would not build it. The typical mine would say, listen, that water is going to be adequate. I mean, at Gibraltar, we discharge water because it meets standard. Many mines around the world are allowed to discharge water. People say, oh, isn't that water poisonous and toxic? It's not. It's natural water. It's rainfall water to a large extent.
Right.
And you don't want to accumulate it. You want to get it, what I call it, you want to get it off the mountain so that it doesn't create a problem. So the design feature is a lower slope and more reinforcement on the face of the storage facility to give it more strength. Second is water treatment plants, so that we will continuously discharge water and we'll never have too much water up there. So that's dealing with water issues. The next is seismicity, and everybody goes, okay, well, we know that Alaska has seismicity. I mean, most people don't understand where that seismicity exists, and they don't know about the Ring of Fire, and they don't know about the subduction zone. They just know that there's been earthquakes up in Alaska. In 1964, there was a massive quake, and most recently in Anchorage, there was a pretty sizable quake. The reality is that subduction zone is at such a distance from Pebble that by the time any Earth movement reaches Pebble, it's negligible. In fact, this most recent earthquake that hit Anchorage, I'm sure you're aware of it. It caused a considerable amount of damage in Anchorage. People didn't wake up, didn't feel it in Iliamna, which is 20 miles south of Pebble. Our seismic readings out at the site actually picked up hardly any movement. So we don't get that. Still, there's other potential seismic features that exist that we know of. I mean, the USGS has done a tremendous job on mapping all of Alaska, and so we know that there are some historical faults in different areas because continents change. I mean,
right.
As much as we like to think that nothing moves, nothing changes, it's constantly moving and changing. So there's something called the Lake Clark Fault. So Lake Clark is about 30 miles to the east of us, and one of the reasons the lake is there is probably this originally is due to this fault. Well, the USGS, they've mapped that fault. It doesn't even come onto the Pebble property, let alone close to the tailings embankment or the tailings storage facility. But we said, let's assume, and the other thing is that fault, there's no evidence to ourselves, USGS, or AECOM that fault has moved since the last ice age. So that's 12,000 years ago. So it's been dormant for 12,000 years. It probably is dormant forever. But let's assume that it's not dormant. Let's assume that it's an active fault. Let's determine what, that fault, strike slip fault, what kind of event would it trigger, and what would the ground acceleration be? And then let's assume that it not only runs onto the Pebble ground, but it runs directly beneath the tailings storage facility. What's its ground acceleration? Let's take that and add 25 to 30% to that, and let's design a facility that survives that. Now, Chile, about 5 years ago, they had a massive quake. And the epicenter of that quake was quite a distance from the city of Santiago, yet it caused massive damage in the city of Santiago. But about midway between Santiago and the epicenter was an Anglo-American tailing storage facility.
Yep.
And do you know that while they had shaking at the flotation plant and concentrator there, they shut that down, zero impact on the tailing storage facility. They had slight settlement of the sands, but nothing else. There was no cracks in the embankment. There was no loss of any water in the storage tailings facility. It actually performed far better than 90% of the buildings in Santiago, and it was closer to the epicenter. So, I mean, if a tailings storage facility is built properly and operated in accordance with design, it will survive all of these things. If it's not, it won't. So I'm just saying we are going to extreme lengths to design a facility to survive a quake on a fault that doesn't exist on our property.
Right. No, I think that puts it into good perspective. And I have to. You mentioned some other significant quakes. If you look at 2011 Fukushima as well.
Yeah.
The bulk of all of those. Actually, matter of fact, all of those plants, with the exception of the one at Fukushima, which just didn't get the diesel to keep the backup plants running.
Yeah.
To cool the reactor. A number of those plants people actually fled to for protection because they were so well built. And if you put that into perspective, they were so well built, and most of the plants in Japan are quite old. They're 30 plus years old or more. So
well, and then it was the tidal wave that caused most of the physical damage.
That's correct. That's right.
And
yep.
And because it inundated everything and caused all the generators to go off and everything. That's what caused the meltdown. Now we are a long way away from the coast. I mean, we're
right.
we're 85 miles inland, so from any subduction caused waves. So that we're not going to see any waves near Pebble.
Right, and I think the point is these structures that serve a commercial purpose, whether it be a mine or a nuclear power reactor, they are built to withstand these types of events, and that's why you have so little of these types of accidents that might occur. I mean, the nuclear power industry has operated for some 63 years, and there has really only been two events, Chernobyl and Fukushima. 3 Mile Island was not really any event at all except for media exposure for no good reason.
Yeah.
And so the bottom line of it is there is a substantial qualified folks, engineers and science behind the design. They don't just, throw this crap up without code.
You raised it before. People get on airplanes and don't give it a thought. and fundamentally, who operated the protractor and the calculator to determine that thing can fly? I mean, you're prepared to get on it. You take your family on it, your children, your wife, and go to 20, 30,000 feet in the air, and you're confident that he's going to land it on the ground. And you aren't confident that we can build a stationary tailings impoundment structure that can stay put.
Right.
Yeah. Again, there's a huge disconnect.
Yeah. Yeah, absolutely. I've looked at the new design there, and the slopes are incredibly conservative.
Yep.
So, moving on to some other stuff, get through some additional talking points here. So, clarify for us just real quick the jurisdiction of the project property. Is it on state lands, sovereign lands, federal lands, or a mix?
It's on state land. Bit of a unique history to this state land. So in Alaska, you have effectively, I guess, 4 kinds of land or property interest. You have federal land, you have state land, and then you have native corp land and private land. I mean, native corp land is very much like private land. In fact, I think if you call it private land, I think native corporations in Alaska own 90% of all the private land in Alaska. But we are effectively on state land. The federal government is the largest landowner in Alaska. So we're on state land.
Okay.
This land was acquired through a land exchange agreement, 1974. The Cook Inlet Land Exchange Agreement. The federal government wanted to create Lake Clark National Park, and the land around Lake Clark was owned by the Cook Inlet Native Corporation. And the Fed asked Cook Inlet if they would exchange their land around Lake Clark for this land west of Lake Clark, which today we'd call Pebble Land. And they said no. I suspect that they looked at their land and saw these towering timbers all over the place. They looked at the Pebble property, and there wasn't a tree in the valley. And they said, no, this is a bit skinny for us. So the Fed then approached the state of Alaska to do a 3-way deal to exchange state land that the state owned on Cook Inlet that was heavily timbered with the Cook Inlet Native Corporation, and then the state of Alaska would exchange the land that they got in that exchange with the Pebble land. And it's a wonderful document, and the best part about it is the preamble is that basically the state is giving up their potentially income-producing land in return for this land west of Lake Clark because of its geological prospectivity, which the state will be allowed to develop unencumbered. So it's got even more discussion around its geological prospectivity and its development potential than any other state land in the state. And then add to that, there's been 2 land use legislative committees struck and hearings and studies completed on Pebble. One in the 1990s and then one, I believe, in 2006. And both those studies involved a public hearing process, and both of them involved the legislature. Both of them determined that the highest and best use was the development of the geological prospectivity, and the 2006 study, I believe, mentioned Pebble. It does mention Pebble, but I believe it's some 40 times that it mentions Pebble and the economic opportunity. In addition, the USGS, I want to say 72, 73, did a study on the geological prospectivity of the Pebble area, noting that it was highly prospective for Arizona type copper porphyry deposits, and that they felt that there was copper moly, copper gold, and those kinds of geological prospectivity. Now, it did mention that given the lack of infrastructure, the economics would be challenged, but this is back in the 1970s. But they identified this area as being as prospective as areas of Arizona. So nothing new about any of this, and it's had pretty decent public hearing. Now, the good news is we're on state land. The bad news is we're on state land. The state is really the agency that is the relevant party in terms of permitting in the state of Alaska. They own the mineral rights. We don't actually own the mineral rights. We will obtain a lease on the mineral rights, and for that we will pay a rent called a royalty to the state of Alaska. So it's in the state's interest to have this developed, to earn the rent, the royalty, as part of the income of the state to provide services for their constituency, the citizens of the state of Alaska. Because we're on state land and not native corp land, we don't have kind of a natural support base from the native corporations, the regional corporations. So back in the early 70s, there was something called the Alaska Native Claims Settlement Act that was entered into that provided 12 regional corporations. They created these large regions in Alaska based on geographic elements, and the federal government gave or ceded about 16% of the state of Alaska to those 12 regional corporations. Plus, they shared about $1 billion cash based on, I think, population base at the time. And the mandate for those corporations was to go out and use their assets and that money to develop those assets, to earn income, earn revenues to provide to their constituents. So they treated these native corporations just like they treated the state of Alaska. Here, we're going to give you some potentially productive assets. You go out and use those assets to create income so that you can provide for your constituents, your native shareholders. Now, some of these companies have been unbelievably successful. So Arctic Slope and Doyon have obviously oil and gas holdings in the North Slope, plus they become big service providers in the North Slope. Nana Corporation owned Red Dog. They owned the mineral deposit, and so that's been brought into production by Cominco Tech. They're earning royalties. They've got a 35% JV interest. Donlin was owned by the Chilista Native Corporation. And so in all those cases, the Native corporations became, ardent promoters of the project. And so then people in the lower 48 and most non-Native Alaskans said, well, this is in the interest of a Native corporation. This would be good for the Native corporation because, and they're promoting it, so we should be in favor of it. Therein lies the rub for Pebble. We're on state land, not on Native land, and so the Bristol Bay Native Corporation isn't a natural ally in that respect. They should be for spin-off for the rest of their constituency, but they changed. When we first acquired Pebble, Bristol Bay Native Corporation was ardently in favor. They came to see Bob and I on 2 different occasions. As I like to say, we were on their Christmas card list. Bob still has his Christmas cards from BBNC, asking what can we do to help you move this Pebble project along, because they'd been following it in all the years Cominco had it. But over time, for reasons we won't go into, they became anti-Pebble, and their view is that, what's in it for us? Why would we promote something that doesn't directly provide us with revenues and resources? So, and Chilista was a big supporter of Donlin. So to mitigate that, we are going to create an entity. The great thing that ANCSA did is it made, I like to say, and listen, all of your Alaska Native listeners, don't take umbrage with me. I'll apologize in advance, but it created capitalists out of the Native population in Alaska and entrepreneurs, and it is so much better than the reservation system in the lower 48 or in Canada. I mean, these people do control their own destiny, whereas reservation lands are held by federal government in trusteeship for them. The difference is palpable, and so is going to be owned by Native people living in the region and Native villages in the region. Now,
perfect.
We've said to Bristol Bay Native Corporation, if you want to work with us on this, we're happy to work with you on this. But if you aren't, then we're simply going to go ahead on our own, and it's going to be the people of Western Alaska that's going to have this interest. That will help, again, answer this, what's in it for me.
So Ron, I haven't checked the GDP of Alaska recently, but can you kind of give it a perspective? I mean, how important would this project be to the longevity and sustainability of the Alaskan government?
Alaska currently has been running, a fiscal deficit. I think their expenditure base is roughly $6 billion a year, and their revenue base has been running at about $3 billion a year. So they've been running a $3 billion, in round numbers, $3 billion deficit, which is, for population base of about 750,000 people. That's pretty significant, and cuts to services would have to be massive. So they aren't in a great place right now, and it's predominantly due to obviously oil and gas prices and getting themselves into a place where they were spending money that they had, but that money has now disappeared. So it's virtually impossible to take those services away. And Alaska is a very big state, and its its population base is very disparate. They've got these tiny villages out all over the place, and trying to provide services to such remote locations at such far distances. I mean, like I said, a gallon of gas in Iliamna is $6. It's because it has to be flown in by DC-6. A half gallon of milk is $12. So Iliamna isn't the only town. All of those little towns are the same. If you're trying to provide education, you're trying to provide health care, it's all the same. It all comes in on airplanes, flies long distances, and so generally the service is not as good as it is in the city, and it's 10 times more expensive. So Alaska's it needs to generate more revenues, and I think, mining is one of the keys. I mean, we did an economic study back in the Anglo days, and starting at the Lake and Penn Borough level, their annual budget at the Lake and Penn Borough is about $3.5-4 million. Pebble's contribution at the size and scale we're talking today to the Lake and Penn Borough would be about $18 million, $19 million. So at least a fourfold or maybe a fivefold increase in their revenues. So you can imagine what that would do for a population of 1,800 people.
Right.
I mean,
impressive.
Then you're looking at the state level. I mean, you're probably talking something in the area of $1 billion to $1.3 billion, $1.4 billion in state taxes and royalties. Absolutely substantial. I think it is something that they need to seriously look at. So on that, two questions kind of related to that. Let me ask this one first. This one came to my head here. So with the newly elected governor of Alaska, Mr. Dunleavy, how is the relationship with him, and how do you plan to reinforce Pebble's importance with the state government? Well, I think Dunleavy's got a direct relationship with mining. I mean, he's married to a lady whose father was one of the signatories to the original ANCSA settlement and who was either an officer or a director of Nanocorp when Red Dog was done. His daughters, I know, have worked at Red Dog and have all attended university. I think 2 of them have graduated and are professionals. He knows what mining can do. I mean, wages in the mining industry are the highest wages around, and mining as compared to oil and gas, and there's nothing, I'm not knocking oil and gas, but mining is far more labor intensive than oil and gas. In the oil and gas business, it's all about finding it, and then you put it in a pipe and you send it somewhere, so you don't do much processing and there's not a lot of labor involved. Well, finding it is about 25% of the exercise in mining. Processing it, and that's that's labor intensive, is probably the other 50%. Then transporting it's the final 25%. But mining has a lot of jobs and they're high paying. And I know in Mike's side, because I listened to his first address to the community, which he did to the Alaska Mining Association after his election, was he talked about mining's potential contribution. And he said, where have all the high-paying jobs gone? How come, we don't have more high-paying jobs? We're a resource state. I mean, and one of his mandates was let's get more mines built. And then he went on to say, all the services that the prior administration wanted to cut, if they simply had 1 or 2 mines, those tax revenues would provide for all those services. So he said, instead of cutting the services, let's build 2 mines in Alaska.
Absolutely.
I mean, how much logic does that make? That's fantastic logic. So I think, and he's not saying let's irresponsibly go about this. I know that he subsequently said, with respect to Pebble, I'm not saying one way or the other. We have to go through a permitting process. My state agency has to opine on this before I opine. And that's all we've ever said, is we've said, let's go through the permitting process. If we can't get through the permitting process, we don't deserve a permit. But having spent the amount of money we've spent, I know we can do this. I know that we can do it responsibly, and I know the economic benefits of this for everybody. I mean, I tell you, I've been on many mine sites in the world, and this is based on its grade and its configuration. This is just one of the greatest mines that sits up there today. I mean, there were bigger and better mines in history, but those mines have all been found, and most of them have been mined out. You go and look, see if you can find a 1% copper mine in the world today that's 1 billion tons or more. I mean, they're not being done. I mean, QB, these mines that are coming into production today in Latin America are 0.6, 0.65.
Yep.
Pebble's way better than that. It's not at 4,000 meters altitude, and it's not in the middle of the world's driest desert.
Right. So the U.S. Supreme Court just heard a case of Virginia uranium, which you might be familiar with the case, but the case is going to provide, when they issue the ruling, is going to provide some context of the issue of state lands versus federal lands versus state rights before federal authority with regards to mining, environment, and to some degree, economic and strategic importance. Do you see the Pebble Project as potentially an asset that the federal government would deem of national importance, strategic importance, from an economic and national security standpoint?
Well, I can't say that we've gone to that level on this project. We think that this is very important. We could certainly supply at least 25-30% of the copper that America needs. We also have a mineral called rhenium that reports to the moly concentrate, and rhenium, is a very important metal, especially in military applications, in these very unique engines that jet engines that the military uses. Apparently, there's a significant rhenium content in the steel alloys that are used in jet fan blades. I mean, we're seeing, again, it's just a natural thing. Technology is doing amazing things, like with niobium. All of a sudden, you can build steel that has ultra strength capability and is lightweight like aluminum if you use niobium as the alloying agent. Rhenium does very much the same. Allows a jet fan blade to have this super strength but maintain flexibility without being brittle. And so there are other issues that come with being a strategic asset and a Canadian company maybe, but we think that small s strategic, yes, this is an extremely important asset for America and Alaska. And I go back to that 1974 Cook Inlet Land Exchange Agreement that says that Alaska is accepting this piece of property in exchange because of its geological prospectivity, and that it will be allowed to develop that unhindered. So, I think a state's rights need to be a very large component in the decision making. I mean, that anti-Pebble ballot initiative was struck down very substantially in the last midterm election, and I think that's an indication that Alaskans want to see this project go through permitting so that they have an opportunity to weigh its benefits.
I agree. Yeah, I think it's
they want those engineers to say, first and foremost, it's not going to damage the fishery. Okay, now that we're past that, what are the benefits?
Yeah, absolutely, and hopefully it'll never get to the level of having to argue before the Supreme Court. It sounds like there's a number of catalysts that have lined up in front that will allow this to probably to go forward with we're getting there. The finish line is in sight.
Yes, I agree.
So you mentioned some other minerals. So we know the major minerals measured and indicated at Pebble, but are there some other minerals of significance?
So the principal metals are copper and gold and molybdenum. And then the minor metals are silver and rhenium and palladium.
Palladium, okay.
Palladium. Yes, there's some palladium. There's other things that can happen. There's also sulfur. We have pyrite, which is, an iron element, and so it depends on the prices. But I mean, we've looked at producing what we call a pyrite concentrate. So, and that has sulfur, iron, and some gold in it. And if we produced a pyrite concentrate, is it economic to ship it, say, to Asian pyrite smelters, sulfur smelters, to recover the sulfur, the iron, and the gold? I mean, there's a little story, if you don't mind if I add a little entertainment, because we said this was for entertainment, right? At the beginning.
Sure.
There's a smelter in Shandong Province, China, and it's one of the world's preeminent smelters. It's world class. It was built by Outokumpu. It's one of the most modern smelters. I swear you could eat off the floor in this smelter. It's not anybody's image of a smelter, but its nickname is the chicken smelter. Now, how does a smelter become the chicken smelter? Well, the guy that built it is probably the largest chicken farmer in the world. He supplies all the chickens for the Kentucky Fried Chicken outlets in China, Japan, Korea, and Taiwan. Now, I don't know, have you been to Asia? There's a KFC in downtown Beijing that is a city square block. The Chinese love KFC. So this guy produces a lot of chickens. And aside from feathers, what do chickens produce a lot of? Chicken poop. Chicken poop. Well, these are hopefully not too many egg-laying chickens. These are for meat consumption. They produce a lot of poop. And what's a component of chicken poop is ammonia. And if you look at fertilizer, what's fertilizer got a lot of? Well, fertilizer's got a lot of phosphate, ammonia, and sulfur in it. So he went out and got himself some phosphate mines in China. He's got the ammonia from the poop. He said, how can I get myself some sulfur? Well, one of the byproducts of smelting copper concentrate is elemental sulfur. So he built himself a copper smelter, and that's why it's called a chicken smelter. So we did a study. Now, it didn't work economically. There was a point for about 2 years where it did work, producing a pyrite con, in which case Pebble would recover sulfur, iron, and additional gold from a pyrite concentrate. Now, if perhaps America was really keen, they would say, we should smelt some of this product on our own lands, but we don't want smelters. We want a better technology, because there is a better technology out there than smelters, and that is hydrometallurgical refineries, which Kennecott, Rio Tinto, was going to build a hydrometallurgical refinery for molybdenum concentrates at Bingham, because Bingham also has high rhenium content. And when you put your concentrate through a hydromet circuit, your recoveries go through the roof. Like a typical smelter will recover 90-95% of your metal. Well, when you have a hydrometallurgical facility, you get up to 98% of the recovered metals. Rhenium is a low recovered metal, probably 50%, but in a hydromet plant, you recover 95+% of it. So, I mean, I remember when Governor Murkowski was governor of Alaska, and we were having a coffee with the governor in London, Bob and I, talking about this, and he said, well, damn, we need to build these hydrometallurgical things you're talking about in America. And I said, actually, we should get the finished metal in America. You're shipping all this concentrate across the ocean, and you're smelting and refining it in Asian smelters.
Yep.
But that's another story.
Yeah, no, certainly interesting, and some of the it's wasteful, and there should be at least some capacity here in the United States, or even
when the last smelter was permitted in America?
50 years ago.
1974, Mitsubishi permitted a smelter for, I think, Galveston. It was never built.
No, it's incredible, Ron. And the other piece of that too is, if you just look at, again, not to go back to nuclear again, but the fuel cycle, the ability to convert and enrich in the United States is almost is pretty much on its knees. There's almost nothing left, and here we are, a country with 98 reactors or whatever it is, 99, and here we've got to outsource our fuel cycle. So it's a sad situation.
It just doesn't make any sense.
So I want to get to some other questions here. So the EPA under the Trump administration seems to be an agency that has become reasonable again. They seem to understand just a bit better the weight of environment, economics, and finding a balance. So the interim administrator, Mr. Wheeler, appears to be on his way to being confirmed. Has the Pebble team had a chance to meet with him, and how is that relationship progressing?
Well, I would say that the EPA has gone back to doing its job, which is being an unbiased regulator, evaluating applications that are being put in by proponents, not preparing applications for proponents and preemptively opining on them. I mean, that's the whole thing. And so this EPA, I mean, they're not any less rigorous than the bulk of the people that were at the EPA in the Obama era. They're simply, I think, doing their job. And yes, acting administrator Wheeler, I think, is doing a good job on that front, and I hope he does get confirmed. Have there been discussions with Wheeler? I think Tom has met with him in Washington, D.C., but right now there's not a great deal for us to discuss with him. It's all in Region 10, and the people that have been appointed to the project and that are part of the 404 permitting process seem to be doing their job I'm not hearing anything back from the Pebble team about, undue issues around the evaluation process at this point in time. I mean, we'll get much more once the draft EIS comes out, but kind of the Army Corps of Engineers runs this, and they manage those agencies in terms of the allocation of data and information, get all their questions back, and then hit us with RFIs, requests for information, in response to what those agencies want to see. And I haven't heard anything untoward coming out of the EPA at this point in time. In fact, I think they know what their job is, and they've been doing it rigorously, holding our feet to the fire, which they should do.
Right. So the U.S. Army Corps of Engineers is working on the draft EIS, environmental impact study, and everyone expects a decision probably around 2020, 2021. Give us your forward timeline, even if it's just a rough ballpark, of when you see the company being maybe fully permitted, construction started, and then operational. Are we talking like 2028, 2030? Where we at?
So again, just to be absolutely clear, the main timelines are actually the Army Corps of Engineers and not ours. They're the ones that set that, and so they've come out most recently with a definitive date, mid-February, for the release of the draft EIS, followed by a 90-day public comment period, which I believe would start probably beginning of March, and targeting the issuance of a final EIS. Again, here's a target, a goal. It's not a commitment. This is a target of the end of the year, and then a decision on the record of decision by spring, call it March 2021, 2020, and then the actual permit probably 45, 60 days after that. That is your 404 permit, or what we call the umbrella permit. You couldn't actually start any construction off of that because you need construction permits. And the construction permits come from the state, almost all of them. There are some other permits that the feds are involved with, particularly with respect to the gas pipeline and the like, but these are all construction permits. So the question is really about when would state permitting start. The earliest we could start, and so this will be a function of working with the partner once we get the partner on board. The earliest it could start would be sometime this year, probably the latter quarter. And we're saying that state permitting will be about a 2.5 year process. Now, the state permits come in stages. So the first permits you want and need are the permits for the road and the port, so that you could pioneer a road in. You can't build anything at site until you've got the road in. So it's important to get that permit in place. And the road and port permits will probably take about 12 months. So if you were going to be as expeditious or as earliest timing, you'd start permitting this year. You'd probably have your road construction and port permits, let's say late 2020, early 2021, and you could probably in the summer of 2021 start with the road. It would take about a year to build the road and get everything ready to accept things at the mine site. So now you're talking 2022, 2023, and then it's about a 3-year, 36-month construction timeline to completion of the mill and all the infrastructure. So you're probably talking startup 2025.
Yeah, certainly. Absolutely, a little bit quicker than I had envisioned. So that's good to hear it coming from you and what your estimates are on it. So moving on to another kind of subject. So the mining business recently saw the merger of Randgold Resources with Barrett Gold. Now we're seeing Newmont and Goldcorp in talks to join forces to compete with Barrick. So Mark Bristow, through his performance and actions at Randgold, seems to have a strong drive for needle-moving growth through the newly created mining giant Barrick. Do you see Northern Dynasty as an asset that can satisfy the hunger of a larger mining business that is looking for a long-term, globally significant value proposition?
Yes. Is that a simple enough answer?
Very well.
I mean, Mark has kind of, I know Mark well, and he's one of the best, operational CEOs out there, and a brilliant guy, good team, and a hardcore operator. He's put a couple lines in the sand around what kinds of returns they're looking at, but also what kind of assets they're looking for. And Pebble does tick the box on almost every one of those projects. I mean, he does talk about looking for a 15% IRR at $1,000 gold. I mean, gold isn't our largest metal produced. It's copper is. So it is to meet his standard, it would be a function of what the other metal prices are, but certainly capability of producing large amounts of copper or large amounts of gold over very long time frames. Yes, and he's even said, some of these big copper projects that have a large gold component, which is interesting. Then two of the biggest copper projects that Barrick have don't really have gold components, Lumwana and Zaldivar in Chile. So my guess is those two are on the auction block. But all the gold companies, and certainly Newmont is very, very familiar with copper gold porphyries. Batu Hijau was a project that they had in Indonesia, and I know lots of guys at Newmont too, people that worked directly at Batu Hijau for years, and they said it was a great, fantastic mine, and had it not been for Indonesian nationalism over ownership that came to the fore about 5-6 years ago, they would still have that mine. They would have invested billions more in it because there's many more years of reserves. The great thing about these porphyries is they're so long life. I mean, Bingham Canyon's been in production since the late 1800s. It's been, an industrialized project from when the Guggenheims came in, I think, in the 1920s.
Yeah, I think it's interesting. I think that you have certainly some interesting suitors, and along those lines, Freeport, you got a lot of weight on its shoulders right now coming off of Grasberg, but Freeport's a copper business that historically has been dominant, and so you can't say that they haven't looked, or at least are thinking at this point about what they're going to do after kind of leaving the Grasberg, or at least starting to move towards a minority interest.
I mean, Grasberg is very much like Pebble. I often ask a question to a lot of people: is what's the largest gold mine in the world? It's a bit of a trick question. Everybody's starting to name off gold mines. I go, no, it's a copper mine. Grasberg is the biggest gold mine in the world. Produces over 1 million ounces a year.
Right.
So certainly Pebble would be capable if you could build it large enough that at probably 300,000 tons a day, it would produce 1 million ounces. If you were to recover the gold in pyrite, you would probably produce right around 1 million ounces of gold a year. So
right. So it puts it into perspective, Ron, where you have the asset's so big it could be a leader in a number of things, and it's interesting proposition.
Pebble's a unique beast in that it's because the copper and the gold are pretty significant in and of themselves. It also makes an ideal vehicle for a consortium, a base metal company, a copper company, and a gold company.
Yeah, it'll be interesting, and I'm sure BHP is looking around as well as things move on with this cycle. So back to First Quantum for just a moment. So First Quantum kind of forward financed Northern Dynasty, and so that worked out. I think it benefited both sides there, but nonetheless, Northern Dynasty got some forward financing. In your view, did First Quantum back out because of their obligations at Cabre, Panama, or do you see them just kind of with their debt loads and so forth? Was it too much to take on?
No. it became a timing issue in terms of them being able to focus their people on the work that needed to be done to justify entering into the larger $1.5 billion agreement. I mean, the issue became, okay, if we give you an extension till the end of the year and we're still in the same spot, then I'm in deep trouble, and you may not have progressed to where you need to be able to make the decision in any event. So, the reality is, it's a small world. Everybody talks. Everybody knows about projects. I mean, Pebble has had so much airtime. There's hardly anybody in the mining industry that doesn't know all about it. And
right.
And anybody there's so much data in the data room. We've had many companies in the data room, and they take a look at it. I mean, it's. I would say that the draft EIS is going to be a coming out moment for the Pebble project, because it's going to be a signal that this is what is highly potentially permitted.
Well, I'm going to throw a curveball at you here. Investors tend to.
I used to be a baseball player, so am I a catcher or am I a batter? If you're throwing a curveball, because if it doesn't curve properly and I'm the catcher, I'm going to throw a knuckleball back at you.
Okay, so investors tend to forget about the cyclicality of and the sentiment features of the natural resource business. So we're still in bear sentiment territory in 2019 after a 2016 pop for the sector. As you and I know, attracting big players in this business during the lows of the cycle is extremely difficult as companies lean up and raise cash for survival. In the event that a substantial partnering deal cannot be reached until later in the cycle when sentiment is good and the good times are rolling, will Northern Dynasty consider getting together with maybe a mid-tier or a junior producer in order to enjoy some of the sustaining cash flow from other operational mines while it advances the future pipeline of projects such as Pebble? So in other words, Ron, to give you a name, why wouldn't a Taseko match up well for establishing an existing sustaining long-term business that can go in alone at Pebble until the right time comes?
So I'll get to the big question about, how we do this in the future. But, Taseko would be ideal, except it's a related party. And so you end up with a lot of hoops to jump through, and maybe you can't get through all of those hoops. So not necessarily the best example, but so with respect to Pebble, because we don't need that much money over the next 12 to 24 months, doing a deal with us it's not going to be expensive for anybody. Almost any mining company can afford it. And also, because it's such a large asset, a lot of consortiums can undertake it. When you look at Antamina, at the trough of the last great bear cycle, which was 2002, you had Falconbridge, Noranda, Teck, and Mitsubishi all come together to build what was then going to be the most expensive mine built in the history of mining, which was Antamina. I think it was $2.2 billion. So these deals can be done at the bottom of the cycle. I don't think we're anywhere near where the metal cycle was in 2002. We're not bull, but we're also not bear. I mean, if it wasn't for the trade issues, we'd probably have copper at well over $3. Maybe we wouldn't have gold where it is, but we'd have copper over $3. So there's a number of sources. The other thing is, again, because we don't need a lot of money, we had quite a bit of interest from private equity groups. And again, the draft EIS is going to be important because, they want to know that there's an exit strategy. The amount of money we need is almost immaterial to most private equity firms. And if they can see an exit strategy that's going to turn them the kinds of returns that they're looking for, which typically, they want a 2.5% to 5% multiple. over a reasonable time period. And so that, as long as they're confident, it gets a permit, and that confidence level takes a big jump when the draft EIS is issued. Then there's the streaming guys. Again, we've talked to a lot of streaming guys, and when permits are uncertain, the amount of money you can raise by way of streaming is expensive money. But once it becomes, the permit becomes, we can see it. It's out there. It's maybe a year, 18 months away. The streaming guys take a look at Pebble and go, oh my God! I mean, there's 500 million ounces of silver in that. That's a massive silver deposit. But guess what? It's less than 2% of the value of the project. We produce 1.5 million ounces of silver in a heartbeat per year. I mean, so there's lots of opportunities for this. I mean, I don't want to overemphasize my position. I don't want people to get overly confident in all this, but this is a unique project, and there's a tremendous amount of interest in this. If it weren't for the Obama EPA, we would have been gone long ago. We would have been gone in 2011. The eagles were soaring overhead. We were trading at $2.2 billion, and people wanted to buy us. And we only owned 50% of the project at that point in time, and a total of only $500 million had been spent. Now, it's not quite 2011, but it's not that far off. And 2020 is probably going to be like that.
And you mentioned, it was another topic I was going to ask you about. You mentioned potential, names like a Royal Gold, a Franco-Nevada silver wheat, et cetera. Offtake deals and potential royalty stream deals. On the whole, overall, even with JVs or partners, do you see something in the next year or two possibly coming out as far as an announcement related to that, or is there any news or information you can give us on that front?
Well, my real preference would be to do a deal with a partner, an operating level partner, so that's we could advance the permitting. Everything on that front works better with the right operating partner who wants to take this thing into production. But failing that, there's lots of money out there. I keep telling people, at our AGM, we had some NGOs who were trying to say, well, you'll never get this financed. I said, you guys, you have no idea. I mean, we're offered money all the time. We did this financing in September or in December. I mean, we did 7. We were offered 25.
Yeah.
And not just from one party. I mean, we took the money. We took the money from all of our shareholders. We didn't. The guys that offered us 25, we didn't take their money.
Right, and this is in the middle of when sentiment really, arguably, is pretty low.
Yes.
So I'll leave that one. We know that something's coming. We'll leave that one alone. But I'd
rather leave those kinds of financings for the capital needs, offtake financings for capital needs, and even streaming for capital needs, because that's when you get the best price. That's
right. Yep. Yeah, that makes sense.
You can see the drool coming out of the left corner of their lip.
So I'm going to go back.
It's called a tell.
I gotta come on to the energy side here for a moment, and I just got to put this idea out there because I think it's something that people haven't really thought about, and I think it really is needed in these remote project regions. And I know that we've got a little bit of time left to go, but it is in process. I think both in Canada and certainly in the U.S. With the Nuclear Regulatory Commission. So it brings me to the topic of small modular reactors. And has Northern Dynasty, I mean, we see these, Russia has floating reactors. We see small scale reactors in submarines, nuclear submarines, and other military equipment and boats even. So has Northern Dynasty considered the total capex and life of generation costs with nat gas power spread over the life of the mine against that of using small modular reactors as a cost-effective long-term alternative?
Well, I'll tell you that we have looked at, and it's been an idea that's been out there for a while. In fact, the Canadian government has actually got a initiative underway right now where they're funding a group with a view to completing a feasibility study on remote villages in the Arctic with a small modular nuclear power plant. And we've been aware of this for some time. And yes, that's probably an excellent alternative. Have we done all the costing on it? No. It's probably not something in the wheelhouse right now, just because it's one of those environmentally, it's for the same reason that we said, let's not put cyanide in. We probably wouldn't put the modular. And I hate even saying that, because the reality is engineering should drive the decision, not emotion.
Yes.
But we got to get by some of the emotion until we get that license to operate. And then I think Alaska is a prime place in all of America. All these little communities, which are serviced only by fly-in fuel, is ridiculous. These remote modular power plants, nuclear power plants, would just be ideal.
And I mentioned that because we follow NuScale Power out of Oregon. They're the most advanced with regards to the NRC application, expected 2021 full approvals, and they already have a deal going in Idaho, their first test plant, a pilot plant, if you will, there. And the features, and they're 60 megawatts. Though a single module is 60 megawatts. The features of these things, from a safety standpoint and longevity and carbon free, are just substantial. And so anyway, I thought I would mention that to you.
No, listen, I'm aware of it, and it's been kind of on the radar. We've been watching it on and off for at least a half dozen years.
So Ron, I know you and I aren't going to be around forever. So what is your personal plan going forward?
Really?
Are you committed to leading Northern Dynasty through permitting and to either operations or a buyout? And if that's the case, do you see the goal of the company as, hey, let's get this wrapped up during the next commodities bull market?
I'm at my shareholders' beck and call. My general belief is that Pebble is the kind of project that once the mining world sees that there's a green light on it, the choice won't be mine. Is that somebody's going to want to buy us, and my responsibility will be to get the highest and best price for my shareholders. That said, I'm completely committed to seeing this thing through permitting and, if necessary, construction development. I mean, nothing would make me happier than, to be standing there cutting the ribbon on opening day, or with a partner on opening day doing the same. I'm not going anywhere in the next few years anyways. I keep myself in good nick. I swim about 3 kilometers a day, 5 days a week. So.
Oh, that's excellent. Maybe I should step up my efforts and get up to where you're at.
so I feel like I know a lot of what the fish feel.
Right. So let me ask you, for potential investors who are listening to this discussion and that are considering Northern Dynasty but aren't shareholders, what would you say to them, and why should they consider Northern Dynasty now, today?
It's the asset. It's always about the asset. I'm going to one of my partners here, Russ Hallbauer, is a mining engineer, hardcore, a Mark Bristow kind of a guy, and Russ says, I've made and lost money on a lot of junior stocks, but he said, I've hardly ever lost money when there's been a real resource there. And it generally is about the asset. When you look at the asset and you look at it and say, even bad management couldn't screw up such a great asset. Good management can make it so much better. I mean, poor assets require extremely good management to deal with them. But this asset is, this asset will overcome the negativism. It has that capacity. And if you're the kind of person that looks around and isn't disconnected, understands where all this stuff comes from, what modern society is all about, what the developed world, and understands that the rest of the world just wants a little piece of what we have, and to give them that little piece, we're going to have to grow our copper production market by probably 25-30% over the next 15 years. It's a simple decision. To replace what's falling off the table in terms of production capacity, we probably need a pebble every 2 years for the next decade, and it's going to be very hard to do that. And we're in the most rigorous evaluation and permitting jurisdiction in the world, and we're in the safest title jurisdiction in the world.
Ron, so how can investors learn more about the company?
Well, we've got obviously the Northern Dynasty website, a lot of information there. Also, Army Corps runs a website for Pebble, and then Pebble has its own website, Pebble Limited Partnership. So there's lots of sources of information.
Well, Ron, it's been a pleasure, and I appreciate the extensive discussion, and thanks for taking the time.
Okay. Andrew, well, thank you for the opportunity.